Hey, welcome back to my channel, Martin Day Trades. I am Martin Gonzalez, and in today's video, my topic is why you shouldn't be staring at the charts, at the screen all day, and how if you do that, you're gonna probably, most likely, high probability, start to overtrade, revenge trade, really mess up your mental state, your psychology, and your emotions are gonna get played. They're gonna be up and down. How? From just staring at a screen. Believe it or not, that's just how it works. We're just emotional beings, and we tend to make erratic decisions if we're not trained to be patient, trained to see if what's coming. If we don't train ourselves to be calm in situations where our heart rate might spike, where your breathing might become shallow, where you can't think correctly, because if you're staring at the screen all day, it's not going to help you. And why less is more, why trading less is going to help you in the long run. Less is more. You might have heard people say that less is more, and in trading that's true. Now, I've talked about in multiple videos of the ratios, right? So risk to reward. So let's say Monday, I take one trade, that's a 0, break even. Tuesday, let's say, was a no trade day, 0. Wednesday, let's say I catch a TP4, I'm up 4. Let's say Thursday, I lose a trade, I'm up 3. And let's say Friday, I catch a TP3. So I'm up 6 by the end of the week. Less is more, right? And those are just 5 trades. And with one or 4 trades, and one of those days was a no trade day, right? So 4 trades out of the week, right? Now, what I want to explain is why being on the computer is going to hurt you long term. So let's say it's going to hurt you, okay, in multiple ways. Let's say reason number 1, you're going to start trading outside of your session. You're going to start trading all sorts of times throughout the day when you shouldn't. You're going to pick up your phone, you're going to open your computer, you're going to see the price somewhere, and you're going to be like, oh, it's high, it's low, buy, sell. Trust me, I know, I've been through this, guys, but that is not okay. I'm telling you right now, that is not okay. That is not okay trading, okay? Well, that's going to hurt you long term. The second reason is if you're looking at the screen all day, you're going to most undoubtedly overtrade. That ties into what I just said, but the last one was not having a trade plan. This overtrading is you're going to take a trade, you might lose, you're going to stay on the charts a little longer, and you're like, oh, well, price is at another level, I'm going to trade again, put on a trade. You're going to lose again, or probably win, or probably lose, who knows. But then you're going to stay on the computer after, let's say you did win, you're up TP2 for the day, and now you're looking to make more. And let's say you buy, and then all of a sudden the market crashes, or whatever the hell it is, right? Sorry, excuse my language. Whatever it is, right? So what you're going to do is then give back that TP2, and now you have a TP1, or let's say you didn't respect your stop loss and you started moving your stop loss down because you couldn't believe you're now losing in the market a trade when you were obviously up a certain amount, right? So let's say you do take that loss, you're up TP1, and you come back 3 hours later and you want to make some money. Now, that's me doing my little quotation marks with my fingers, right? You want to make some money. You want to force something. You want to force a trade. And trust me, guys, the market's more liquid than the money that you'll ever have in your bank account, okay? So you're going to want to force something, and all of a sudden you take another loss, and now you're break even for the day. You were up TP2, but even then, going back to my example, is you did take either a losing or break even trade on that first trade, and then you had a winning trade on the second trade. 2 trades max a day, guys. I don't trade two trades anymore. I just like to have my one good trade idea. If it plays out, it plays out. If it doesn't, I will reanalyze it in the evening and see where I could improve on going into the future. Now, if you stare at the screens, I'm giving you plenty of examples already why you're gonna blow your account. You're gonna wake up in the middle of the night, right? You're gonna open your phone, you're gonna check the charts, you're gonna say, oh, price is at a certain level, place a trade. Guess what? You just messed up your sleep. Trust me, I've been through this years. Sleepless nights because I would wake up to go use the restroom, I would open my phone, see the chart, and then I would place a trade, and then my mentality's all messed up, my psychology's all messed up, my emotions are all messed up mid-sleep. I messed up my sleep schedule, sleep quality, because I couldn't go back to sleep because there was a trade on, right? So if you're gonna be trading all day and looking at the screen all day, there's a very high probability you are doing what 99% of losing traders are doing, and you will be a part of that statistic. So if you want to be the 1% that actually win in this market, you can, but you have to go through the experiences and be very disciplined and do what the 1% are doing. And trust me, I've studied, I've done enough to know what they do. I have friends who are making 10, 20, 30, 40, $50,000 a month in payouts, more. My friend Andre, 100K, like 2 months ago. So what I want to do is explain to you guys what it looks like. Now, I've had a very hard time with this concept that I'm talking about right now, looking at the screen. So with TopStep X, with TopStep, they have a feature where you can lock yourself out for 15 minutes, 30 minutes, an hour, or all day. So as soon as I get the itch, right? I get an itch, like almost a trigger of some sorts that, oh, my mind wants to look at the charts. What I'll do is I'll log into my TopStep X, I'll go to the lockout settings and lock myself out for an hour. Usually that does the job. I will not look at the charts until my session, which is New York Open, the New York Open, 9:30 a.m. Eastern Standard Time. So with that being said, guys, stay off the charts when you're supposed to stay off the charts. Another good example to build good habits is once you place your trade, you have a couple of options. You can place an alert at the bottom of your stop loss, place an alert at your TP1, and place an alert at your full TP, or maybe some at a couple levels in that range, right? So let's say the trade activates and it's just kind of going sideways for a bit. Go to work, turn off your computer, go to work, because there's nothing you can do. What you're just gonna psych yourself out. You're just sitting at a computer. You can be doing something else, right? So you get an alert that says, hey, stop loss was hit, try again tomorrow. At that point, you just take it as an L and get on with your day. It's a small L, be okay with it. It was risk, managed risk. Now, but let's say you get an alert that says move stop loss to break even. Immediately pull out your phone, hit the break even button, walk away. There's nothing you can do. Maybe move your stop loss alert to the break even entry so that if it comes back to break even, you get an alert and you're like, oh, okay, well, I didn't lose anything today. But if the trade continues to go towards your take profit, you will get an alert that says full TP hit, congratulations. Write a little note in there. That's what I usually write to myself. Makes me feel good. But let's say your TP's at TP6. At TP3, you may want to have an alert that says move stop loss to 0.5, so you can at least lock in a little profit for the day. 0.25, right? Not even a full TP1. But once it gets a TP4, hey, that's a good move. Move it to TP1, 1.25, 1.5, right? Pay yourself that day. It's already gone up 200 points. You might as well lock in something, especially if it's going to want to do a full reversal. But setting alerts is important, guys, so that you can keep your eyes off the charts, so you're not messing up your emotions and you're not messing up your psychology and you're not over trading, you're not over leveraging, you're not making bad decisions, right? This is going to help build discipline, consistency, confidence, courage in yourself to know that, hey, you're becoming a very great, exceptional risk manager when it comes to trading, and you can fund your account, you can fund your lifestyle, you can, maybe it's not something where you can quit your job, but hey, who Who doesn't want gas money at the end of the month, right? Hey, you made $1,000 withdrawal. Who doesn't want to make an extra, have an extra $1,000 in their pocket, right? You could do a lot with 1,000. Make an extra payment towards your mortgage, make an extra payment towards your vehicle bill if you have a vehicle payment, pay off your credit card an extra 1,000, or let's say work is rough and you're in your particular job, it's not stable, and an extra 1,000 can go into your savings to give you some form of security. Oh wow, I got $1,000 in case of an emergency. That can go a long way. And the only way to do that is staying off the charts. Take less is more. Keep your eyes off the charts so you don't wreck yourself. So if you found value in this video, please do me a huge favor, guys. Subscribe, like, and comment, and I'll keep posting more videos like this for you guys to enjoy. Now I'll catch you guys in another video.